What's up you guys, Charles here and welcome back to the channel. Now in today's video I'm going to go over why I actually think that the stock market, especially in the USA, is going to crash. And of course when the USA stock market crashes, and it sends ripple effects around the whole world because a lot of people are invested in the US stock market. Now before we hop into the video, I do want to say I'm not a financial advisor, and of course you should do your own due diligence and research before you make any investments, but I think that by watching this video you will gain something very valuable. Now why will the US stock market crash, you may be thinking. So as you very well know, the Federal Reserve in 2008 bailed out a lot of banks and printed a lot of money to do so, and managed to boost the economy back up by printing a huge amount of money, and that sent us into the biggest bull market. For those that don't know what a bull market is, a bull market is when the stock market goes up, and a bear market is when the stock market goes down. But we entered the biggest bull market in history. And in the recent coronavirus crisis, well, guess what? The Fed once again printed $2 trillion and boosted the stock market with that. Now, I don't know if you see it, but I definitely see it, is that printing money automatically leads to inflation, because the definition of inflation is the expansion of the money supply. So if you take into account the amount of money they printed in 2008 and the one now, it's a huge amount of money, and they've done it since then also. Now the only reason people have not seen inflation in the consumer price index, which is how much it affects you on the supermarket, is because the price for the consumer would have probably gone down, but the Federal Reserve printed money, creating inflation, which makes the value of the money go up and the prices go up, which just means that the prices have gone slightly up instead of going down. Now the thing is, with this stimulus, particularly the one during the coronavirus, the two trillion one, the Federal Reserve are just pumping more air into the stock market bubble that they created in 2008, and well, as we all know, bubbles have to collapse. Now the Fed claims it can control this inflation by reducing its balance sheet, but it hasn't been able to do that recently because it's not able to change interest rates that much because of all the money it's printed. And of course I'm not the first one to notice this. Peter Schiff has noticed this, and he's the main one arguing for this, and China has noticed this because last week China sold 20% of its US Treasury bonds. Now you might be thinking, well, because they just want to get rid of their US Treasury bonds. But actually, why would they want to get rid of their US Treasury bonds, right? They're the best Treasury bonds in the world. Actually, it's very likely that they just want to get out of the dollar, because the US Treasury bonds, when you sell them, they have to come out as dollars, and they don't want dollars, so they want to sell the Treasury bonds to get out of the dollars altogether. And who's going to buy back the billions of dollars that have been sold of Treasury bonds by China, who's probably going to continue this in the future? Well, the Fed. And how the Fed going to do that? They're going to print more money, and they can't just keep printing more and more money, because that's going to lead to hyperinflation. So at some point the bottom's going to fall off, and you're probably going to see that first in the bond market in the USA. Once the bond market goes, the stock market will crash soon after. And now you might be thinking, well, if the USA has been able to print money for so long, then why hasn't it already happened? And the only reason they are able to do that is because the US dollar is the reserve currency. Now, why was the US dollar put as a reserve currency? Well, it's because when it was put as a reserve currency, it was backed by gold. But now it isn't backed by gold anymore. It's a fiat currency. Fiat meaning that it's not actually backed by anything of value. So when it was put as the reserve currency, it was essentially just put as gold, because the dollar was backed by the gold. So the dollar was worth a certain amount of gold. Now, since then, it's still been the reserve currency, and it means that when everything goes bad in the world, everyone wants to go into the dollar. And because there's a huge demand for the dollar and only a certain amount of supply, well, it increases the value of the dollar. But to compensate for the increase in the value of the dollar, the Fed is able to print out a huge amount of money so that the value of the dollar goes down and doesn't really change. And that's the only reason they're able to do that. But by printing all this money, at some point the bottom's going to fall off, and it's very likely to be very soon. And everything's showing that it's going to be very soon, because there's also a huge trade deficit in the USA, which, for example, Trump said he would solve, and said that a big trade deficit was bad because it meant the USA was importing a huge amount, and he said that by restoring manufacturing jobs and all of that in the USA, the trade deficit would decrease. It actually increased. And so, back to his own words, it's actually bad for the economy. And so everything seems to be pointing in a negative direction, including unemployment, by the way, because the unemployment figures in the USA are actually false, because this isn't just the people in full-time employment, it's also people in part-time employment. And so a lot of people who can't find full-time jobs are taking part-time jobs, and sometimes even 2 part-time jobs. So they're accounting for 2 people with a job, but it's just one person with 2 part-time jobs, and often part-time jobs are a lot less stable than full-time jobs. So unemployment numbers are actually a lot higher than the general public thinks, and even Wall Street thinks. And so everything points to the fact that the US economy is in really bad shape, except that the Fed is just printing more money that pushes the stock market up. So the stock market keeps going up, but at some point it's going to have to come crashing down because the US dollar will likely not be put as a reserve currency anymore, and it's unlikely to go back into any other currency. It will just be back to gold, which it was when the US dollar was backed by gold, because every other currency is a fiat currency, except maybe the Chinese currency, because rumors have it that they have a lot more gold than they claim and that they would be able to back up their currency with gold. But it's unlikely the world will want to take that risk again, and they would just go straight to gold as the reserve currency. So gold might spike up. But the US dollar will lose a huge amount of its value that will cause so much inflation that the Fed won't be able to regulate it anymore. And when that happens, there will likely be social unrest and the stock market will come crashing down. So how can you prepare for this? Well, some ways of doing it would be firstly buying into gold. If you then want to take more added risk, it could be to invest in gold mining companies, but that's an added risk. But also investing in stock markets like Swiss stock market, who have a lot more stable economies and aren't really impacted that much by the USA and don't have a huge amount of debt, because this debt is also happening in other banks around the world. For example, the UK has done it, the European Central Bank has done it, although they don't have the amount of room to print that much money that the US does because they aren't the reserve currency. So the things you could do is invest in gold mining stock or just gold, because it's predicted by some people to go up to $15,000, albeit not today or tomorrow, but in the next few years. So it could be seen as a good investment. And gold mining companies will obviously, their stocks will go through the roof if gold value goes through the roof. And by investing in the economies that are more stable now, then people, when the stock market in the US will crash, then they'll go into the more stable economies that aren't affected by the US that much. For example, Switzerland. Now listen, if you gained any value from this video, I would really appreciate it if you did smash that like button. It really helps me and the channel reach more people thanks to the YouTube algorithm. If you've got any questions or comments, then pop them down below. I try and answer all of them. And it also helps me, the YouTube algorithm, to reach more people. And last but not least, then smash that subscribe button too if you want to get more amazing content like this from me. Thanks for your time and see you next time.